Hey everyone, we are here for our next session. It will be Trust in Space, exploring new frontiers for the exchange of assets and value. And I will let them take it from here.
Thank you very much for that.
Sorry, before you guys start, for the audience, can you confirm that you can hear them in the chat once they start talking?
Do you hear me? I'm Bruce Cahan. Thanks for coming.
And hi everyone, I'm Pip Ryan. Nice to be here and to see everyone. So I think we might be waiting for someone to chat. Can you guys confirm you can hear us? Well, I think we're still waiting. Yep.
Thank you,
Okay.
Greg.
Thank you very much.
Thank you, everybody.
Okay, that's wonderful.
Fantastic.
Thanks, everyone. So I'll kick off by introducing myself. As you can tell from my accent, I'm here in Australia. I'm actually in the snowy mountains of New South Wales. My name is Dr. Pip Ryan. I'm a senior lecturer at the Australian National University in the College of Law, and I'm also a barrister. So yes, I wear a wig and robes and appear in court dressed accordingly. And I've been a lawyer for a number of years, and my particular interest these days is legal technologies, and I'm the lead author for the International Standards Organization's Blockchain Technical Committee, in particular the technical specifications for blockchain smart contracts. So that's a bit about me. I think Bruce is going to introduce himself, and then I'll come back and present my piece.
Well, we know each other through a group that we're fans of at Stanford University at the law school called Codex, the Center for Legal Informatics. I'm Bruce Cahan. Like Dr. Ryan, I am a lawyer in Pennsylvania, New York, and California, and a lecturer at Stanford in the engineering school, where I teach ethics and finance to engineers and other students. And I have a nonprofit called Urban Logic that does some interesting projects, of which I'll allude to the one that we're working on that's relevant to this discussion. So, Pip, back to you.
Thank you, Bruce. I've set a timer, and at about 13 and a half minutes, I'm going to stop speaking and hand over to Bruce so that we've shared this 50-50. We're not going to build any Q&A time to the end of this presentation. We welcome any chat. I hear Go the Bears. I'm sure that that's somebody I'm supposed to know about. Thank you. I like to think about the Vikes at UVic in Vancouver Island. But at the ANU, yes, we play a bit of field hockey, if that's anything anyone's interested in. But thank you for that as a start on the chat. We will be reading and following you. So what I want to talk about to start with is trusts on the ground. We promised you trust in space, but we feel as though there's something very grounding about beginning with trusts on the ground. We talk a lot in the blockchain world about trustlessness and the automation of trust. I just want to talk a little bit about something in relation to trusts that's very English in origin, but has had an enormous impact on the way the law has developed, particularly in the common law world, the United States, Canada, New Zealand, Australia. And this is the institution of the trust, the relationship that is created when an agent takes money for a client or their principal, if we use the legal term, but your client, your customer, on a promise to do something with that money. Now, that money could be cash, any particular currency, but it could also be bullion. It could be another kind of currency. It could be a cryptocurrency, and it can also be another kind of asset. This is really important for today's presentation because we're talking about third parties who, in a peer-to-peer technology arrangement, establish a trading funnel or a trading platform or a financial exchange market. And we're talking about doing this online. None of this is new, but what we need to think about, and what I wanted to talk about today, was that sometimes this relationship of trust, which imports fiduciary obligations and custodial obligations, suddenly is created without the parties having realized it. And that's because this institution has its origins with widows and orphans, trying to make sure that my wife, after I die, will have title over the property, or my son will have title over the property until my wife dies, and to protect it from marriages I don't approve of. That world still exists, but it has now imported its way into commercial dealings on financial platforms and in marketplaces where the parties may not realize, actually, we just established a very traditional relationship of trust, and there are certain legal obligations that are now imported. So let's say I say to Bruce, hey, Bruce, do you want to buy some cryptocurrency? And I will trade it for you. And if you want to cash it in, hopefully the currency will have gone up in value on a secondary trading market, but the asset itself that I'm now investing in could be something that you're entitled to a share in, depending on how much you bought. This is a really traditional crypto investment, but also cryptocurrency trading arrangement. If I take that and I control it for Bruce for that purpose, I have become an agent and a trustee. And I think there's a lot of misunderstanding amongst the community we're in today, this sort of liquidity community, a lot of a lack of misunderstanding that the danger that lurks when we do this does not just emanate from regulation. It's not just an important SEC kind of regulation or our equivalent here in Australia, which is the Australian Securities Investments Commission, which is our equivalent of your Securities Exchange Commission. These are really important players and controllers for valid and integrity-based systems that we're trying to create. But we need to know they're not the only lurking viewing point. They're not the only eyes watching what we're doing. The market is watching what we're doing, and so are our investors. I'm talking about lawyers who could run class actions against the mischief that can arise if you don't appreciate the obligations you owe. So this is the basis of my doctoral thesis, and it's the basis of a couple of books that I've written. You can look them up. I won't start spruiking them here. You can look them up if you're interested. But this idea about the accidental trust relationship is very, very important if you want to do what you do well. If you professionally and commercially want to maintain your relationship and integrity, and to be able to do what you do in a way that delivers excellent custodial duties and also financial returns. So I guess what I wanted to try and deliver here was, you might think, oh God, that sounds complicated. Where does the danger lie? I think there are just three things to think about. Number one, and this is the whole basis upon which I wanted to deliver this discussion. Number one, if you are going to take custody of somebody else's asset, whether it's a crypto asset or a cryptocurrency or something else that is recognized as having value, you need to be very, very careful that you understand where a conflict of interest might lie. So you need to disclose that. You need to, for example, do what real estate agents do, which is they say, I'm going to sell your house for you, but you need to appreciate I'm also trying to sell other houses in the suburb. This is good for you because it improves the market base. More people are going to come to me to look to buy your house because I'm also selling other houses. It may look like a conflict of interest, but it's actually the natural way that market works. You just need to disclose it. And I think that's a really important thing to start with. So number two, you need to tell the market where the risks lie. Where are the certainties and where are the risks? And be open about it and create a relationship with your base where you say, you know what, this is a little risky, but that's a good thing because risk usually brings a higher return. And there are players in the market who have their low risk investments and are willing to try something a little higher risk. They just want to know. The regulator needs to know and your customers need to know why it's risky, when the risk might arise, how to manage it, and how to think about the full suite of their investments. Now, the third thing to think about is, am I giving the market financial advice? And if you are, you may need to actually be registered or licensed to do that in that particular market. So this kind of transparency and openness should not be buried in 280 pages of terms and conditions that are only available via 12 different menus on your website. If you look at some platforms, some financial services platforms, websites, I can think of one in particular that is longer than Hamlet. The New York Times commented on these kinds of terms and conditions and said, to read or not to read, that is the question. If you're dealing with people in Europe, there are regulations in Europe now that say if your terms and conditions are not digestible readily and reasonably by a person of average educated intelligence, then the courts are not going to protect you with the disclaimers that exist in those terms and conditions. So thinking about this precision paradox which says the more precision you put into the way you explain to your clients and customers what they can expect, the longer they're going to be. And the paradox is the less likely it is they'll be read. So what I would suggest is when we think about these relationships of trust, we need to say to the market, what should you expect in relation to conflicts of interest? What should you expect by way of disclaimer? Am I offering a product that is like the side of a cigarette packet in Australia, which has to say, if you smoke this product, you will die? Do you want that to be the nature of the kind of risk that you warn people about? Or do you want to say, hey, listen, this could be risky. Have a look at the terms and conditions. This could be really an interesting experience for you as an investment type. And it's also very, very exciting. And when somebody comes up with something new and novel, like cryptocurrencies or exchanges that can be traded automatically or online using blockchain or other distributed ledger technologies, you want to be able to offer it, but you need to do it in a way in which the regulator is going to let you play and it's going to allow your customers and your clients to enjoy it, but without some class action building up against you and going for your personal assets, which is the kind of danger that you would experience in most common law jurisdictions if there has been a relationship of trust established between you and those assets. I will leave you with this parting thought. If I go to an auction this afternoon in Sydney and I buy a really bad $50,000 painting, that's a matter for me. The regulator is just going to turn a blind eye unless somebody tells me it's a Picasso and it's not, or tells me that will definitely go up in value because it's a certain kind of painting. But for any other kind of mischief, if I want to spend that $50,000 on the painting, the regulator doesn't care. More fool me. And regulators and courts try not to interfere with the contracts between humans. But if it's a cryptocurrency, suddenly all eyes are on. And that's because it's got a special kind of quality that looks a bit like money. And that's when the regulators get a little bit excited about that $50,000. So just with that whole picture now painted, I'm going to hand you over to Bruce, who's going to talk to you about a different kind of trust in space, which I'm also very excited to hear about. So Bruce, within my time, over to you.
Pip, that was amazing. It reminds me of when I was a student law clerk for Judge Hannum. We had a case come before us, which I'm putting in the chat, that got a well-known opinion written by somebody who's on this call, and we imputed a trust relationship to make sure that the farmer got paid. And in truth, my grandfather was a kosher butcher, so it was not far from my ken that we wanted to make sure that the family of the farmer got taken care of. But I'm here to talk to you not about cattle, but to talk to you about trust. And as Pip and I were preparing for today, we realized that really trust is an incredibly important value and asset. And terrestrially on Earth, we've grown accustomed to the mechanisms by which we assure ourselves of trust, the counterparties. How do I buy something in Australia and know that it'll arrive in Palo Alto, California? We have all kinds of Amazon and other ways to do that. But let's say we're trying to establish a village on the moon, as Artemis, the Artemis Accords recently signed, and other activities would like to do. Well, if I want to survive in a desolate place like the moon, I need fuel, and I need habitat. I need radiation shielding. I need a lot of things that would be very expensive for me to arrange as either a company or a government to supply in regular quantities. So what I've proposed, and you can read these papers also on the web, is that we need a commodities exchange for outer space. And commodities like bandwidth or debris removal or fuel or regolith, the dust that's on the moon, that if you concoct it perfectly, it would be concrete because it's very expensive, and you would not launch concrete from the Earth to the moon. So you have to build with what you have up there. So these commodities are fantastic. I mean, it's incredible engineering that allows for robots to find their way and to dig and find these deposits. But at the end of the day, the robots have to communicate what they found and test it to be what they say it is, and then to sell it, hopefully, prior to the time of the mining of it. So as we all know on this call, you in the terrestrial economy, but for crypto, if you have a gold mine or a silver mine or an oil field, or a harvest, you sell a certain amount of it before you dig it out of the ground and produce it in its refined or processed form. You want to know where supply and demand meet, because you don't want to overproduce, which would take more capital than is necessary. You don't want to underproduce because you have sales that you would not have made. So 3 years out, 5 years out, 10 years out, how much energy would we need for the robots running around at the poles of the moon? You'd like to know that ahead of time, because your investors could say, okay, go build some solar and other energy sources for that demand. We take all of this for granted in terms of knowing the market and how the market is developing on Earth, but also taking for granted that we trust that the delivery will actually be made. And I live, as you hear, in Palo Alto near Stanford, and we know the story of the Transcontinental Railroad that carried goods and material from the East Coast to San Francisco to in the 1800s to open up the Western territories. Well, how would you know that the gold or silver that you put on the train in San Francisco would end up in Chicago? You had a Chicago Mercantile Exchange that would stand behind those trades, coming back to Pip's point of how do you trust that what you've negotiated to get as the real value you will end up receiving. And so what ends up happening in the terrestrial example is that we actually have two assets. We have, let's say, the gold bullion, and we have a certificate for the gold bullion. And it's much easier to move the certificate than the actual gold bullion. And so digitally, we're moving, as crypto does, the claim to the real asset between its owners. That becomes a very important piece of developing the space economy, the trust that if you held the right to a commodity, you would actually be able to take delivery of it at the time and in, let's say, the orbit that you wanted to appear. And this is not a minor problem. This is a major piece of building out the space economy. So I've suggested that there need to be 5 buckets of space commodities, raw materials. So there are rocks on the moon that have ice, and we might want to find water and hydrogen and oxygen from that water. Those could be the processed goods. That's a second bucket. The third are services. So bandwidth, debris removal, launch services. When I send Pip a box at FedEx, I don't tell FedEx what plane number to use. I just tell FedEx how fast to get it to Pip, and that's the commodity I bought, right? The fourth bucket are derivatives. So think about financial swaps, like options, where an interest rate could go up or down. I could bet against the Aussie dollar or the US dollar, and one side of that trade will make money, one side will not make money. Well, if we use that mechanism for will the launch occur or not, we can de-risk the space economy. And then the fifth bucket would be financial indexes. So assume that you want to invest in the lunar economy. Today, you really can't do that effectively. You have to invest in a company that may be pursuing some lunar business. But if you wanted a bucket of all the commodities that you use or would build on the moon, that would be that index. So, having the trust that what you think you're investing in, whether it's a cattle that my grandfather and great grandfather would have wanted to make sure showed up in the butcher shop, or whether it's the gold of the Transcontinental Railroad example, or the lunar soil and habitat and fuel, we have some trust issues, and I don't want to come back if I'm on the moon expecting that energy to be there. I don't want to come back to San Francisco federal court to litigate that issue, because Matt Damon would have died on Mars trying to litigate that issue, right? We want Matt to get off Mars. That's kind of the going concern here for trust. And so we need some self-executing smart contracts and other mechanisms by which to at least assure that he can get anyone who trades on an exchange has the ability to enjoy the fruits of what they think they're supposed to be buying. And what that comes back to, and this is where we are in forming it, is creating a board of trade, a BOT, to sponsor the rules by which everyone who's a member of the exchange would put commodities on the exchange for sale and be trusted as a buyer and a seller. And this gets into some international intrigue, obviously, because there's difference of opinion in terms of how various nations perceive the trust that's needed up in space. We'll avoid those issues for this call, but suffice it to say that I think it's important that we use space for peaceful purposes, but that we not be naive that our approach is the only approach. So when it comes down to it, what I love about thinking about space is it simplifies for me, Pip, what we need to get right on Earth. It gets really existential, right? If I can't trust that a trade is going to execute appropriately, or that there'll be some delay or question about it, and to the extent that finance is all finance does, in my opinion, is transform risk, return, asset type, and maturity. I need to know that transformation actually is reliable, and that the parties who to it will get the value from it that they are relying on in the next supply chain use of that asset. So with that, I'll pause, just because Pip and I are used to having a conversation amongst ourselves and see if there are questions or comments or you want to react to my story.
Well, I have to start with, Bruce. So I was going to comment that this point you made at the end about how interesting it is to try and devise how you would do this in space is a really good way to imagine how we can improve the things that we do on Earth. And I have had multiple experiences with exactly this repeatedly in one situation, which is unbelievably similar. I've worked on a number of projects over the last 4 years, building apps for social justice projects through local community legal centres. So I mentor the students. I've got teams of them. And we've built, I think, about 22 apps over the last 4 years out of 2 universities. And every single time, without fail, we say to the community legal centre, what's the problem you want us to fix? We come up with a suggestion for how we could appify the solution. And without fail, the community legal centre comes back to us and says, the app could work and definitely solve our problem, but what it's brought to our attention is there's something we're doing wrong already. So it's like they said, we need to fix our back office operations to support the app. But now that you've presented the solution, we realize what one of the major problems was in the first place. Yeah. So it's almost like it's exactly what you're saying. You reimagine a solution for a brand new context, and suddenly you understand better what you needed to improve in the first place.
It's fascinating. I do find myself like you in places that I don't necessarily belong. As a Jewish person, I find myself intrigued by Pope Francis and his call for social justice investing, socially responsible investing. Yeah. And how would you do that? Well, I teach elements of ESG, CSR, SRI at Stanford. And so, why are the language of faith, anyone's faith, so distant from the principles of trust that we need in finance? Because when you actually look at the parables in each of the faiths, they're not that different. They all question, how do you trust somebody? And what's their motivation? And so, as we are pursuing the blockchain issues and in our ways, I think asking the question, how do you trust and why do you trust? And what happens when somebody breaks trust? How do you make sure that they are permanently accountable, let us say, for breaking trust?
And Bruce, I would say, while we are at a very, very difficult juncture around the world, when we think about trust in our institutions, particularly financial institutions that should have protected us from the 2008 global financial crisis, and then some of our, let's just call them government or leadership institutions around the world. And I mean, I was born in Venezuela, so I've been following what's happening in South America and in Venezuela for a long, long time. And that's a very interesting study in its own right. But we're not immune from making mistakes here in Australia. And yet we've got a high relationship of trust with our government. But we need to say to ourselves, hang on, if there's so much distrust in government and institutions and as they change, why don't we come up with solutions that give us peer-to-peer trust so that we as humans, who exactly as you've just said, are motivated by the same parables or the same moral bases and grounds for the way that we want to deal with each other, why don't we take control of it and have a bit more more exclusion of those institutions?
Well, and I think that's some of the ideal nature of crypto, is that there is a certain fact as of a certain time for a certain purpose. And it is a unique feature of this community that it seeks the certainty of a fact and to prove it mathematically. Yeah. Because it's very difficult to do that other than in a PhD thesis for a moment. And so I think we need, in the larger conversation, I'm creating a periodic table of quality of life elements using government finance data, which, to your point, Pip, if government says we have to spend all this money in these different ways, they must have metrics that justified funding it in all those ways, right? So what are the key performance indicators? What are they? Did they improve over the last 10 years or whatever the term of office might be?
And where did social equality and environmental sustainability figure in those metrics? Because on the periodic table, we're going to have the noble gases, and the noble gases are going to be the ones that create that triple bottom line for sustainability.
And you'll also have, very rare elements like respect for each other, that when you don't have those elements, the whole system collapses or gets very expensive to try to put back together again, as we've seen in failed states. So,
well, Bruce, that's our next project then, isn't it? Haven't we just devised using this half hour what we're going to do next?
What a conference this turned into. This is
Yeah.
great. Thank you, everybody, for coming. Thanks for putting up with us and the way we talk amongst ourselves. And we hope that this was enjoyable for you to hear about trust in a couple of different contexts.
Yeah,
Thank you for having us.
Thank you guys so much. We're going to transition to our next talk now.
Okay.
Thanks again.